Wednesday's market closes mixed in the grains, mostly lower in the livestock except for nearby feeders. Rich Nelson with Allendale is joining us with analysis. Rich, let's talk about the grain complex. Corn and soybeans under pressure, but we've continued to see kind of, at least in the corn market, some consolidation here, haven't we?
No, we certainly have. I think a lot of us are pointing out that this yield argument is still quite a bit in front of us here. And though we can have some light concerns about demand, I think all of us are saying that there's an overwhelming supportive issue regarding the yield discussion. Certainly, our discussions regarding our survey here released just on Wednesday, it looks like a lot of trade focus now on identifying whether we're going to have a 3 bushel cut, as our survey suggests, or maybe the discussion about 5 or 6 bushels of ahead.
Right. So we got the big push in the corn market after the Pro Farmer Crop Tour numbers came out, but it looks like the market really wants some confirmation. And so are we going to have to wait for the combines to roll, or is that going to come in the WASDE report?
I do think that this WASDE report lined up here on the 12th probably will give us a little more guidance on this issue. But as we all know, the last 3 to 6 years, the story has always been we wait for the combines to roll here. So at this point in time, the market is priced roughly around a 172-ish yield number for corn. It's not yet pricing in that 168, but that will certainly be something to look at if we do see those September or October yield numbers change.
You bet. And corn and soybeans, I guess we could arguably say we've had some recessionary fears that have spilled over into, say, crude oil, and that's all kind of pulled down those two markets too, hasn't it?
Very valid discussion. And obviously, with our concerns about Friday's employment report, we do have this idea that the report will probably be beating the trade's low expectations for job growth. Therefore, strong interest rate moves lined up next month. So I do agree 100% that the outside market focus right now is a little concerning in the short term.
Gotcha. So soybeans have also pulled back here off of last week's highs. We've continued to consolidate, trying to price in this record crop. Where do you think we're going to find fair market value, or how much lower do we need to go?
As far as our viewpoints, especially with the idea of maybe a 1 bushel cut in yield, which is what our 2-week-long survey suggested as far as Wednesday's release, a 1 bushel cut in yield, that still implies a strong point of support right at this 14 to 14.20 range for the November contract. So I think a lot of discussions, at least for right now, saying we do have support for corn, which is strong, moderate support for soybeans. We'll see about these yield numbers these next few weeks here.
Yeah, yield will be very interesting here. And we've had some good rains, though, to maybe fill out this soybean crop now here, haven't we?
That's a great point here. With these past few days of rains this past weekend here, especially for Iowa, central into southwest Iowa, we're not going to really help things and majorly change the situation, but certainly I think we are removing a little concern for soybeans in terms of the trade focus in the very short term. So we have a lot of counter arguments right now.
So at these lower prices, though, it looks like when we get close to $14, we do find some good end user demand, and we have been seeing some pretty good export sales as a result of it, including today, right?
And that sure is right. And I've got to be honest here. Our sales this week and last week, by historic standards, they're not large, but already made a large amount of new crop sales in prior months. So we still have a relatively good new crop booking on the soybean side. We really need to have this lined up and continue to stay in place in order to offset our concerns about the general supply situation.
So Wednesday we saw the wheat market kind of reverse a lower opening there. Was that some end of the month short covering, or was it the dollar pulling back, or what was it?
I think you can throw all those things in the kitchen sink and say they're all factors. And let's also throw on top of this idea that the trade is still focused on rising export numbers out of Ukraine. One small thing, especially about that rebound we had earlier this week, that one-day pop, I do think there's a moderate amount of concern about this new crop wheat planting situation in Ukraine. Obviously, September and early October are big issues for that. Keep in mind, they had been talking of anywhere from a 20 to 60% cut in yield or in acres. So we'll see if that does happen these next few weeks.
Yeah, I saw the Ukraine ag minister say they thought they would be at least down 20% on winter wheat acreage. What about spring wheat harvest? Are we seeing a little harvest pressure?
And that's a valid question. And keep in mind, we always know that there is actually a seasonal on this Minneapolis contract, which does go in line with this pressured idea. I think in the very short term, as long as we're still pulling out some good yields, this is still an issue which is pressuring us in the short term. we'll definitely have to see about this next movement as far as plantings for winter wheat these next few weeks, which may be a separate factor as well.
Okay, the wheat market still feels like it's trying to bottom here, though, doesn't it?
It does, but it's not doing it
Yeah.
convincingly. I guess that's our main point. We can argue fundamentals and numbers are a little maybe we're a little undervalued, but right now we do want a little more confidence in saying this market is ready to move higher.
So a lower day in the cattle market on Wednesday, despite the fact that we had lower corn, and some of that, or a lot of it, was really tied to lower cash trade.
It sure was. We saw some dress sales in the north. On the low end, some 229s in Iowa. Most of the trade was 228 yesterday, but as we understand, 233 was last week's average trades. So the question for us with our setup right now, maybe this week's cash, especially with last week's good big slaughters, especially with weights now over last year, looks like we're having a moderate amount of short-term concern. Maybe we'll move into consolidation zone in the next few weeks here.
Okay, so maybe rolling over there a little bit. What about this hog market? Kind of a tug of war there between lower cash index, but the fact that we have such a big discount to that index. So what wins out here?
I do think this is an issue for the futures to win, especially these next few weeks. We all understand there's a seasonal in October of the National Pork Month featuring, and those features are procured during the month of September. So in the next few weeks, we do have a strong seasonal for futures, but keep in mind they are trying to guess how low prices will be on October 12th and December 14th in the months ahead. So we do have concerns that, yes, well, a short-term bounce maybe for 3 weeks ahead, but that doesn't alleviate the winter problem still looming in front of us here.
Gotcha. Funds have been liquidating their long positions in both cattle and hogs, though, and do you continue to see that as a factor, or will they continue to do that?
I do think, at least for the very short term, I think a lot of this is going to be also outside market related as well. So on the beef side, at least, we do have some moderately strong fundamentals going into Q4, moderately strong fundamentals for Q1, and then much better numbers lined up Q2 and Q3 of next year. So I do think we'll see funds certainly show some interest back into this market here these next few weeks or next few months. In the short term, I think we might stagnate.
Thanks so much. Rich Nelson with Allendale.